Good morning, welcome to this weekly market update from AGM Markets. Today is the 8th of November 2013. What we'll do today is go through some technical analysis on Euro Dollar, Cable Dollar, Swiss Dollar, CAD, Aussie and Gold. Just going to review what's been going on in the markets this week. It's been a very busy and interesting week, and give some sort of outlook for next week and the rest of today as well. Basically just go through the interesting setups that are in play and the main focuses on each of the charts really. We're not making any trade calls recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. For any new followers, we have 3 moving averages in each of these charts. The red one is a 50 simple, the purple is a 100 simple, and the gold is a 200 simple moving average. Okay then, let's have a look at the Euro Dollar. We'll mainly just stick to the daily and then scale down if there's any interesting setups in the shorter term time frames. So what's going on the Euro? The Euro has been a really interesting and technical chart. And in terms of this daily chart, we've spoken about this fib before. So this one here from the lows to the highs, that held and it rotated higher, broke through the highs there like butter, and now what we have is this fib here. So if you extend your low to where we bounced off of that 50% into the new high, bam, surprise, surprise. No, sorry, I'm looking at the wrong one here. Well, actually, it's interesting because I looked at it on this one here. But yeah, if you do extend it from that, so into the dip buyers, you can see right after 61.8 we're coming off. We had a big spike through that. But what I meant to draw, I mean, you can play it. It depends which type of fib you prefer. If you like doing the dips and raising the low and just keeping playing like that, that's a perfectly adequate. Although you would have needed a wide stop there if you're trading 61.8. But of course, you can just wait for a candle reversal pattern like this, a nice low, long lower wick there, and then buy. And of course, in the shorter time frames as well, some really lovely technical action there. But if we just take that fib, so extend it from the low of this chart, so it's basically this low here, and with that big high, you can see the fantastic bounce off of that 50% retracement, pretty much to the tick. And we had a daily candle close above the 100-day moving average as well. So really technical move here. And the bias now really remains towards the upside. I mean, what's happened this week? We've had a big sell-off. We had some weak CPI. I think that might have been last week, actually last Friday. Some weak Eurozone CPI, and then we had the rate decision yesterday from the ECB, and they unexpectedly cut rates. The consensus was for a hold of the rates and then a cut maybe in December in the next meeting, but they unexpectedly cut rates and we had a massive sell-off yesterday. But I mean, if you flip it to the shorter term time frame, you can see with that lovely bounce off the 50% retracement, and we have rotated higher and put in a big sort of spike low there. So the odds are, in my opinion, that we rotate higher and take out these highs. I mean, the fundamentals don't really back that up, but we mainly speak about the technical on this chart, on this video, sorry, and that's what I think is the high odds play really. I mean, you can see on the 4 hour, it's all just lots of lower wicks. I mean, a massive lower wick there. The buyers have come in. I'm sure there would have been some big orders at that 50%. To make such a big wick on that, but of course, and we also on the weekly. We'll just briefly look at the weekly. Weekly, we have this 200-week moving average here coming in at this level as well. So a lot of confluence here, a lot of confluence at this sort of 50%. So it was, and it was 133s as well. If you draw a support, if you just draw the 133 line, you can see that also lined up with that 50% as well. So a lot of confluence, and there's no surprise really that we got a big bounce there. But of course, the weekly candle closes will be very interesting to see this week. Of course, there's nothing stopping it coming down today. We do also have non-farm payrolls today as well, so it could completely change. But if we have a really, because we did have a good US GDP number as well yesterday, and that brought it down as well. But a lot of buyers have come at that technical level. So if you have another good NFP number, then there's nothing stopping it coming back down, and weekly candle close below the 50%, for example. So really interesting rest of the week here, how the weekly candle closes. You can also see we've got these spikes here as well, so previous resistance potentially turning into support here. So that's another level that you could perhaps use on there, sort of 133s. Well, just keep it as 134, to keep it nice and simple. So yeah, very interesting rest of the week here. The weekly candle close is massive, I think. I mean, if it keeps that big lower wick, then I wouldn't be surprised to see it rotate higher into next week. We could potentially do a video on Monday actually, just to see how it closes, and then give it a more accurate outlook into next week. So I think this is a really big and interesting week in terms of long-term cycle plays on this euro. Okay then, let's have a look at the cable. Cable's been chopping around really on the daily in terms of this, well, in terms of the last few weeks really. You can see it's just going sideways. If you flip it to this weekly chart, the last sort of 6-7 weeks just going sideways in between this choppy sort of range, which is around it's got 159 there and 162, so we're talking about a 300 pip range there on the daily and the weekly. You can see that there much clearer on the daily chart. I mean, someone says a double top here. People be looking for a break. We've got a slot as well. In terms of a break, you need a sort of daily candle close below this, in my opinion, for it to come back down. The BOE held rates yesterday as expected, so that gave it a bit of a slight uptick there. But yeah, in terms of this, the weekly and daily, it's just chopping in between this range. For any clear direction, we need well, I suppose we need a weekly candle close. But if you bring the daily up here, then we need a daily candle close outside of these levels for it to get some sort of a momentum either side. In terms of shorter term, I mean, very choppy around here on the 4 hour. 1 hour, there's a decent move yesterday in terms of fib retracement. So if you can see there's low to the high here, lovely bounce off the 50% retracement, 100 SMA. Nice little reversal pattern there, some nice lower wicks, and we rotated towards the upside, but we didn't quite take out these highs, so it looks like it may even just come back down to the 50 SMA and just chop around. It's currently above the 50 SMA here, so that was a nice interesting short term setup. But in terms of going into next week, it's still inside this sort of 300 pip chop zone really on the daily. Dollar Swiss, it's just making lower highs really, some big bounces up. You see nice bit of upper wick we've got here. I mean, as we said, it's been very similar to the euro dollar chart in terms of sort of mirror image charts. The euro's posted a big spike, a big lower wick there on the daily, and so mirrors chart. Dollar Swiss has post a big upper wick here. In terms of this fib here, you can see we're very similar to euro, close below the 50% retracement, big upper wick. If you're sort of selling that at the 50% with pending orders, maybe stops buying the 61.8, you'd be fine here. Or if you're waiting for a nice reversal candle, then you'd be at a similar sort of level here. So because we just closed below the 50%, so bias here is towards the downside. Of course, we closed below the 100-day moving average as well, and on euro we closed just above the 100-day moving average. So very sort of mirror image chart here. But it is a big green candle still, a big green body on that. So buyers will still be fairly confident that they'll get a bigger push towards the upside. So as I say, it's a very interesting. It'll be very interesting end to the week here. I think it's all based on this NFP number, good NFP number, and dollar will get strong. Should get strong because of this whole sort of tapering thing. Any sort of good news holds back tapering. Any bad news holds back tapering. Any good news brings tapering back onto the the scenario here. So yeah, good news is just it's basically doing what it should do really. Any good US news makes dollar strong. Any weak US news makes dollar weak. So NFP number will be massive today in terms of how we end the week, in terms of the weekly candle closes, etc, etc. So yeah, the weekly's not that massively interesting. I'll stick to this daily. In terms of the 4 hours, the same sort of chart really. It's just hovering below this 50%. You can see it's also previous resistance as well around here on the dollar Swiss. So sort of nice bit of confluence resistance there. In terms of shorter term time frames, nothing much of interesting. Nothing much of interest. Sorry. It's all about that big 50% level is the key resistance. Yeah, it's basically that's all I'm massively focused on. To be honest with you, on the dollar Swiss. Dollar CAD, it's still holding this this uptrend here. I mean, a nice sort of bounce off this this trend line support here. I think that was last week. Sorry, I think we spoke about that. Yeah, nice sort of fib confluence there as well. So off this sort of 50%, 61.8% range, buyers coming off this 50%, perhaps with a stop span of 61.8 rotated higher. And you can now see that high which got broken above has come back down previous resistance, now acting as support. So very, very technical stuff there. And in terms of sellers, a lot of sellers I would assume be looking at this. Well, it's not even really a fib really. There's nothing much of interest there in terms of the sellers coming in. There's no particular level. Yes, in terms of daily, it's all about just trendline support, really, in my opinion. We've also got these moving averages as well, so I'd personally be looking for more buying opportunities, really. If you flip it back to this daily, if you draw that fib there, you've got a bit of confluence maybe at the the 61.8, this sort of 50%, 61.8% range, and the 100-day moving average. If we do come back down, that'll be an interesting sort of buying zone really, but nothing much of interest on that dollar CAD. I think it's much more interesting in technical charts, for example the euro dollar and the dollar Swiss chart. Aussie dollar sort of floating in between no man's land really, after we've had this fib here from the obvious swing high to the low of this daily chart. Sellers have come in at the 50%. We've just sort of been just grinding lower really this week. It's sort of been going sideways, but yesterday's a nice bearish candle, and it just about closed below the 50-day moving average here on this chart. So the bias is still towards the downside really. Buyers will be looking for this fib to hold if we do get down here. Yeah, if it does come down, then sorry, this doesn't work. If we do get down, then this will be the fib that they'd be looking out for. It's basically just the obvious swing low. Previous support as well at the 50% retracement, so keep an eye out on that. In terms of shorter term charts, nothing massively of interest. And this is key support that has been holding. These sort of 94.20s. That's been holding the Aussie currently, and yeah, that's all I'm really focused on in terms of the Aussie, to be honest with you. It's all that is two big fibs. The bias is still towards the downside in my opinion, but this support needs to break this sort of 94.20s. Let's have a look at the gold. It's still sort of floating sideways really, quite choppy, to be honest with you. Don't know why I've put that there. Yes, let's zoom here a bit on the gold. But there's there's some interesting levels here on gold. We spoke about these two fibs here. So that one from the low of the daily chart to the high. You can see we're currently sitting just above the 50% retracement. And if you look at this smaller one here, from that low to that high there, sort of double 50% confluence here off these sort of 1306s, 1307s. Key level there. and you can see it's currently holding. And also what everyone's looking at is this 1300s, massive line in the sand here for gold. So lots of supports there, so a sort of double 50% confluence, and that 1300 marker. So it's all about the weekly close here. If we close above this sort of 50% and this 1300, then the bias should really be towards the upside. Yesterday's daily candle, nice bit of a lower wick in there as well, so similar to euro really, dollar getting weak, but it all depends on this NFP number today. If it's a very strong number, then we could see that dollar get really strong here and push gold and everything back down below these key levels. So there's a lot of key levels on the charts, and then especially with the main pairs, so your euro dollar, the dollar Swiss, and gold here is around hovering above, euro and gold hovering above big 50% retracements here and big levels. So it's all like the NFP number today. I think it's expected around 120,000. If we get a big number, then these levels could get broken, but then again if we get a weak number, then we really could fly up and post nice bullish weekly candles here. So yeah, it should be an interesting into the week. Hope you have a great rest of the week trading, and I look forward to doing another video next week. Have a great one. Thanks for watching.